All right. Speaking of insurance, speaking of money, we're going to stay with the topic of money now. We're going to talk about the digital transformation in the financial market services. And to do that, I'm happy to bring back onto the stage, he was here yesterday, the CEO of CeBIT Group from Switzerland. Please give a warm round of applause for Mr. Urs Rüegsegger. Good to see you again. Hello.
Well, good afternoon, ladies and gentlemen. I'm really impressed and I feel flattered that you decided after a heavy lunch to follow my presentation about infrastructure services. Because normally, except for the people working in that industry, infrastructure is not really an exciting business. I hope I will be able to convince you that it was worth coming. The transformation to digitalization is fueling the financial infrastructure with a whole new momentum. The world around us is consistently changing and evolving with new technologies, opening new markets, and providing new opportunities. Behaviors are changing as a result, and not only how people interact with each other or how they interact with business, but also how businesses interact with each other. This is also true for the Swiss financial market, of which we are the primary infrastructure provider. As the backbone to the financial industry, we look at the digital transformation primarily as a great opportunity. Today, I will show you how CeBIT is defining and leading the digital transformation and taking a key position in the Swiss financial industry. Let me give you a brief overview of what we are doing. We operate a competitive infrastructure for the whole Swiss financial center, catering to a broad international client base. Roughly 1/3 of our revenue is achieved outside of Switzerland. CeBIT is comprised of 4 different business areas. We operate one of Europe's key regulated stock exchanges, and we are the reference market in this role for about 35,000 Swiss securities. Second, we are one of the leading post-trading partners in Europe and one of a few with cross-border capabilities offering international custody and settlement services. Third, we are one of the leading providers of financial information in Europe with over 80 years of experience. And fourth, we are the market leader in merchant acquiring in Switzerland, Austria, and Luxembourg, and a processing provider across Europe. We are owned by 140 national and international banks in Switzerland, and many of them have outsourced core activities to CeBIT, relying on our ability to master technology and to guarantee a stable operation at any time. The most prominent client among them is the Swiss Central Bank, outsourcing the interbank clearing system of Switzerland to CeBIT, and we are running it on behalf of the Swiss National Bank. So we are the technology company in the Swiss financial center. Now that you know what we are doing, let me explain why we are best poised to play a leading role in the digitalization of the financial industry. From our point of view, there are 4 good reasons to it. First of all, we have the experience. We have already led digital transformations before. In 1961, CeBIT introduced the first electronic stock exchange television service, which broadcasted stock prices from the exchange to the back offices of the banks. In 1995, 20 years ago, SIX again revolutionized stock trading by launching the first fully electronic exchange worldwide. Other countries are still today debating the future of floor trading. Switzerland has abandoned it 20 years ago. Second, we are operating what is called the Swiss value chain. SIX is one of the only financial market infrastructure provider which provides fully fledged, straight-through processing over the whole life cycle of securities or financial products. This value chain is one of the most efficient and secure financial market infrastructures in Europe, and nowhere else is it combined and connected under one single roof. And by the way, our trading platform is among the fastest in the world. Thirdly, we are part of the right networks. We are user-owned and user-governed. The client is always center. And we are used working in the same network with big giants and small game-changing companies. The networks are established, be it virtual or physical, and can easily be expanded and adapted to changing technology needs. And last but not least, we have set up the infrastructure to innovate. Innovation is at the forefront of our strategy and is embedded throughout the company. We have established an innovation system that allows to mobilize our employees and networks to quickly identify changing needs and explore solutions that can be implemented. Now, what are the core elements of the digital transformation? Digitalization of the banking and finance industry is evolving at an extremely high rate, as you probably know. Some of the developments are causing fundamental changes to our business models. With many others, it is still unclear and not yet possible to predict what the effect on the industry will be. However, we are following the digitalization along the following dimensions. Digitalization is leading to rapid changes in the client expectations and how they intend to interact with financial institutions. Clients no longer want to go to a bank and speak with a relationship manager in person. They want to get what they need on demand, while on the move, anytime and everywhere. This is shown at the bottom of this slide. Now, transformation will run along 4 directions. First, it's full end-to-end automation, allowing to reduce manual intervention and helping to increase efficiency of the total system. This is pretty much straightforward and certainly not new. Second, and becoming more and more important, is best quality data. There are different aspects to it. First, the quality of data will allow higher straight-through processing rates. Second, the convergence of different distribution channels, online, physical, or whatever, needs or makes it necessary to have data available in high quality across all these channels. And third, looking into the future, by collecting data, analytics becomes more important. And the value of data increases with the quality of each record, allowing intelligent cross-references. So best quality data is one of the key requirements of the digital transformation we are in. Third, cybersecurity. You all know about the reputational damage a cyber attack for the company under attack can be. When we look back to last year when NICE had a computer glitch, it took only minutes until rumors of a cyber attack were spread in the online media. To protect our systems and to explore new ways to defend against cyber criminals must be of highest priority for an infrastructure provider. And last but not least, the digital world means real-time processing. T+3 or T+2, the current industry standards, will be under pressure. Batch processing or overnight maintenance procedures are no longer feasible. In a world of T+0 or instant settlement. All these four developments will urge infrastructure companies to readjust their business model, to redesign their application landscape, and to make use of new technology. CeBIT has a clear strategy to face these new challenges in the market, and one core element of this strategy is innovation. In order to CeBIT to continue as a leader in fintech and digitalization in Switzerland, we have identified 4 areas to focus our innovation efforts on in order to avoid getting lost in the ocean of new ideas and announcements of fancy technology features. Financial service utility, technology-based solutions that enable financial institutions in boosting their efficiency by automating and centralizing painful operational processes. This is our contribution to the financial infrastructure 4.0. We are currently exploring different ideas. First, a centralized accounting hub that would significantly reduce long onboarding processes. One single source of data at any time up to date. Clients are verified and cross-checked the first time, and information is then entered and stored into the centralized hubs. Updates are processed once and only once, and automatically be made available to all participants. Any future account request for linked institution can then quickly be allowed nearly instantaneously. A second idea we are working on is blockchain or distributed ledger technology. This technology is currently dominating the digitalization conversation and has the potential to disrupt business as we know it today. Mainly because this technology has 3 important features that are promising relief from some of the major pain points, especially in the post-trading industry. Let me mention 3 aspects. Historically developed and grown, complex system can be replaced by one single platform. Different national standards due to local legal frameworks can be replaced by one industry-wide standard. And third, hierarchical networks leading to time-consuming and manual reconciliation can be replaced by one single source of truth. So you see, distributed ledger technology has the potential to disrupt particularly the clearing and settlement business. The second innovation field are regulatory services. Regulation is an essential part of the financial industry, as you have heard before. After the financial crisis, scope and pace have dramatically increased, and regulatory requirements are by definition not differentiating and lead to additional cost with no potential increase in revenue. And there are 2 key questions. Can infrastructure support the industry to cope with regulatory requirements? And how can technology best used to do so? And I want to give you an example. Investor protection. Product information sheets or key investor documents are becoming a requirement. They already are in the EU, and they will become a standard in Switzerland as well. Standardized information sheets for financial products would allow clients to fully or better understand the characteristics of these products and would allow customers to compare the offerings of different banks. Why should every bank develop this solution individually? This is something you can be mandated the infrastructure. Third is the payment ecosystem. Technology-based solutions that satisfy the needs of consumers, no matter their payment habits, and fostering a cashless society by offering the best solutions possible for making payments as smooth and convenient as possible. For example, historically, payments were done in cash or run through banks or credit card companies. However, technology firms have been quickly encroaching on this traditional banking business. And the convergence of online and offline channels in a digital environment require to explore new payment-related services for banks, merchants, and consumers. In response to this, SIX has created CeBIT, the alternative white-label real-time P2P payment app system, as we have demonstrated this morning to the Chancellor of Germany. It has been successfully launched in June 2015 together with 2 of the major banks in Switzerland and is now expanding to many other banks across Switzerland. At the same time, we have explored the new payment system and related services for banks and merchants, and the payment system is now recently expanding to the P2M, that means to the merchant space, accepting payments not only from person to person, but also from person to a merchant. And CeBIT is designed to take into account one of the key characteristics of the digital world. It's an open system working with open interfaces that would allow developers, startup companies, develop new apps, including CeBIT as the payment tool. And the fourth innovation field we are working on is technology exploitation and prototyping. This would allow SIX to keep its finger on the pulse of the technology or technological evolution, anticipate new technology, and facilitate their adoption not only in the infrastructure space, but in the whole banking system in Switzerland. We have created an incubator called F10, which acts as the driving force behind the technological developments in Switzerland. It provides scouting, quick prototyping, and therefore faster idea-to-market services. As of today, we want to expand the F10 FinTech Incubator. We want to build Switzerland's largest innovation lab together with our clients, our owners, the majority of the Swiss banks. We try to set up a strong connection in the network in Switzerland and also having involved global partners. We are creating an innovation pipeline strengthened by deep and long-lasting community ties that go beyond the terms of any given project. Being an integral part of the community guarantees you cultural spillover and acceleration of our own innovation initiatives. SIX operates like the whole financial industry in a highly changing environment. This is not new. The financial sector had to face a lot of changes in the past years. But new is the speed of changes and the internationality of players. SIX will put all the efforts to cope with the new evolutions and provide also in the future first-class infrastructure services to the whole financial industry. Thank you very much, and I'm happy to take your questions.
Do we have any in the audience? There was one that I was asked to ask you, Mr. Rüegsegger, and that is, what would you think when we're talking about financial services, when we're talking about stock markets, and this transformation process that's happening, what is the biggest mistake you see being made right now?
If you would ask our customers what is the key criteria, for an infrastructure company, then they will probably say it's reliability,
Reliability.
You have to maintain stable operation at any time. And I think the problem we are facing is how do we combine stability and reliability on one side with innovation on the other side. Or in other words, we should not innovate in a way that will have a negative impact on the resilience and the stability of our systems.
And do you think is that happening though?
No. On one side, I would say, fortunately, no.
Yeah.
But on the other side, the more you are, so to say, bound to a stable environment, the less innovative and less creative you are. And I think it's a challenge, a cultural challenge, to find that balance between these two aspects.
Yeah. Okay. Very good. Okay. Thank you very much. Oh, do we have a question? Was there one? Oh, yeah, right here in the middle. Oh, your eyes are better than mine.
Hi. You mentioned the changing environment, and as we are all aware, Frankfurt and London are trying to merge. Can you sort of stay aside and just watch this? Is there a Swiss cocooning model which survives all this, or do you have to be part in this game as well?
Well, I mean, do we have an alternative? First of all, when SIX started in 2008, we decided SIX was a three-way merger between the exchange, the post-trading company, that time called SIS, and a company called Telecourse, which was basically running the cash settlement system. And we decided to merge these three companies and building up an integrated business model that would allow, first of all, to assess all these regulatory changes under one management responsibility. And second, to diversify the revenue risk because the business lines have different revenue patterns. At that time, we were blamed to build a Swiss silo, or a Swiss cocoon. In the meantime, this integrated business model has become fashionable because many of the exchanges around the world, I mean, it's probably not fair to say they are copying it, but they are moving into the same direction. Now, it's a fact that size matters in any infrastructure business. And that's at least as far as we know, and at least as information has been disclosed, is the motivation for the merger of these two companies. If we look at where are we competitors, then we see that on the trading layer, they are active in completely different markets. Our competitors are the so-called alternative trading platforms, or MTFs. And in the post-trading space, these two companies are mainly active in listed or exchange-traded derivatives and OTC derivatives, a business we are not in anymore since we sold our stake in Eurex. So at the first sight, the impact is quite small on our business model. But I would say if we look at the overall, at the broader picture, it certainly will have, the consolidation goes on in the financial securities industry. It will probably have an impact on the overall or total cost of trading. This will certainly lead to tougher competition, something then we have to find ways to deal with.
Okay, very good. All right, Mr. Rüegsegger, thank you very much. We appreciate it. Thank you
very much.
Thank you very much.